obviously in the United States, we have seen a big shift in work culture over the last couple of years. The big one though is that millions of people, not only in the United States, but across the world have started to work from home. People are converting bedrooms and their living room into an office, and this has been a bigger phenomenon than I think a lot of people realize. Now, I have talked a lot about on this channel the big shift in terms of worker ideology here, because when people started to work from home, when the pandemic really struck, you had millions of people that really started to rethink their jobs and their careers and what they wanted, and of course, what they wanted to get paid. Workers have had a lot of power in the business-employee relationship, but now at the end of 2022 and possibly even into 2023, the employer is starting to gain an upper hand once again. The Federal Reserve has started to talk about how work from home culture is actually raising inflation in the United States. Businesses are starting to get creative with cutting costs, and that could mean worker outsource in the near to distant future. And of course, we have a really strong labor market, but today I want to talk about how strong that labor market actually really is. So to start, I want to go over the Federal Reserve here and their thoughts about inflation and work from home. Now, it doesn't really seem like those two things would be directly connected, because in my mind, when I think about inflation, I think about prices going up. If I'm going out to an office, then probably inflation is going to go up because I'm going to be spending more on gas and I'm going to be spending more on a variety of different things. So I would think in my mind, people going to the office would actually make inflation go up more. But according to the Federal Reserve, this is not true. And it has to do with the other big shift over the last 2 years, housing. Now, in 2020, the pandemic struck, and that meant a lot of money printing, and it also meant a lot of low interest rates. And this equated to millions of people buying homes all at once. The housing market has exploded because of that. And the other part of people buying houses because they were cut from their job. People switched jobs. People no longer could go to the office because of the pandemic. Now, they needed a home, which means they had to buy a house right now. Some people could work from their apartments, but if you have a roommate or you have a really small apartment, you're not going to be able to fit all of your office supplies that you need in order to do your job well. This is exactly why people got raises so they could get houses, and now debt was sort of spiraling. But according to the Federal Reserve, with so many people getting so many houses all at once, this massively contributed to inflation. And in this light, I have to say that they're right, because median price for a home has gone up by nearly $100,000 over the last 2 years. And that means that people have to spend a lot more. And we've gone from a seller's market to now a buyer's market, meaning that people in 2020 and in 2021 were putting their house up for sale, and they might get 10 to 20 people bidding on that one home. And that meant that the price was most likely going to go well above asking. And I have actually seen houses go for around $50,000 to $100,000 more above asking. And that's just in my neighborhood. My neighborhood's not that sought after, so I can't even imagine some other really desirable areas in the country. But it's not only that. Because people were staying at home more, they were tending to consume a lot more things than they were before. A lot of people didn't have a home office, so they had to go out and get laptops and computer screens, or maybe even a second phone in order to do their job effectively from their house. Not only does that mean that housing prices go up, that means that electronics prices massively went up. And not only that, but a lot of kids started to go to school from their house, and a lot of parents didn't have a laptop sitting around for them to go to school. Some school districts were able to give the kids laptops so that they could go to school and actually have class online, but not everybody was able to do that, and parents had to shell out money in order to get these things. If you've gone to try to buy a car, whether it's new or used over the last couple of years, I'm sure you've had the salesman tell you that we are in a chip shortage right now for our electronics, and that hugely has affected the auto market because the manufacturers who create these chips have not been able to gather the resources quick enough because demand has been incredibly high. That means you have inflation in the auto market, but then you also have inflation in the general electronics market because these chips are also used in our everyday electronics like phones and laptops and calculators and so many other things. They're basically the brains, and if you don't have them, then your electronic can't function. All of those things went up in price as well. So the Federal Reserve believes that one simple change like this work from home culture shift because of the pandemic, Now inflation has gone way up, and they believe that inflation could ultimately stay relatively high because more and more people are working from home. And until that factor changes, then inflation is going to stay above their target level of 2%. They didn't really say how much higher it's going to be, but it could end up staying pretty high. Now, what exactly does this work from home revolution mean for businesses? I've talked a lot about what it means for employees. Employees have been demanding better benefits. They've been demanding better pay, better work-life balance, just to feel valued in their company. And businesses over the last 2 years have been, for the most part, giving employees all of that. And it made a lot of sense to do that in 2021 because of all of the money printing and the stimulus and really low interest rates. Businesses could take on debt. They could take on investor liquidity extremely easily. So yeah, they were giving out raises, big raises, and they were hiring a whole bunch of people and taking on all of their demand because, well, they had the money for it. But the economic environment in 2021 was very different than what we're facing right now. Right now, we're facing really high interest rates from the Federal Reserve. We're facing a situation where businesses are not able to get as much money as before, but they still have all of the same costs as they did over the last couple of years. For the most part, businesses have not lost their offices. I mean, there are a few here and there that did sell their office spaces, but businesses want to hold on to that real estate because real estate is a valuable investment and they can use it for whatever they want to. So until they fill them with another tenant or their people can come back to the office, they are not selling that office space, which means in the meantime, it's just costing them money. So in 2022 and probably into 2023, these businesses have a big decision to make. They're not making as much money in sales because inflation is so high in the United States right now, and they're not getting that same investor liquidity. So they're most likely going to have to fire people, fire a lot of the extra people that they hired, meaning that this record low unemployment is most likely going to go up. The Federal Reserve anticipates that it could go up to around 5% by the end of next year. But here is the interesting issue with all of that. These businesses and corporations still need a lot of those jobs to get done. So what exactly are they going to do? Well, the growing trend in a lot of businesses right now is outsourcing. So we saw this, 20 and 30 years ago. This was a big hot topic in the United States, especially with the manufacturing and the auto industry. A lot of these companies were realizing that they could make all of the same stuff for a whole lot cheaper all the way across the world. And a lot of these other countries, particularly China, would welcome it because they want US dollars and they want to be able to have a stronger economy that is relied on by other countries. From a business perspective, this makes a lot of sense. And what you've got to understand here is this is how it has always worked. Businesses have always outsourced a lot of their materials because here in the United States, we have a certain living standard that a lot of people want to live by, and we have a certain amount that people want to make. Businesses cannot get around that. They have to pay people fairly for their labor, and most companies try to do this. I'm not going to sit here and stand up for every single company, but with that said, that means that they have a lot less business in the United States and more business overseas because the amount that they pay people overseas is not the same equivalent as to what they pay them here at home. So it makes financial sense to do that. However, the trend before was those were physical jobs. So like I said, they were manufacturing, they were people trying to assemble vehicles overseas for our automakers. But in 2022, now businesses are slowly starting to outsource a lot of white collar jobs. A lot of office jobs, a lot of not physical labor jobs are starting to get outsourced overseas because these businesses still need a lot of these things done. But they can no longer afford to have Americans to do it. So this really puts Americans and our economy in a really, really difficult spot. I have said for years now that automation and the changes in our workforce is going to be completely different 5, 10, and 15 years down the road. A lot of the jobs that we have today are going to basically disappear and a robot is going to be doing them. A robot can't go on strike for a corporation. A robot doesn't demand a raise. So of course, businesses are going to go to that. That makes the most sense profit-wise, and it makes the most sense in terms of business growth. growth. But what it means is that the only thing that's going to be left 5, 10, and 15 years down the road is your white collar jobs, your jobs that typically require a college degree, higher education, or better skills. The issue is a lot of Americans don't have access to those skills and higher education at the moment. Even if they did, if they have to go to college to get that, then they're going to be massively in debt just to get a job, when right now that's not necessarily the case. Sure, you might not make the most money, or you might have to work really hard, but you can get a blue collar job and still make a decent living in today's economy, but that is going to disappear 5 to 10 years down the road. The scary part is right now, because of this work from home revolution, businesses have realized that they can hire somebody to do that job remotely. They didn't think that they could do that before, so now you have even more jobs potentially disappearing in the United States. And my question is, what exactly is left? Well, this is the scary reality that we're facing in 2022 and possibly into 2023 and beyond, as now you have to have even higher skills and even more education, which makes the labor market even tighter and more competitive going forward. And right now it is extremely competitive because the Federal Reserve is raising interest rates. Yes, we have really low unemployment. Many Americans are employed. I anticipate that changing, but the bigger trend is that businesses are slowing down their job posting. They're not looking for as many people. They don't need as many positions filled because they can't afford to pay people right now. And what that has led to in 2022 is workers who are looking for a job, they have to take what's available, and that pool is slowly drying up. Now, I'm not sure what's going to happen with our economic conditions in the future. I don't know if we're going to see a great rebound in 2023. I don't know when the Federal Reserve is going to lower interest rates and make our economy centered around growth again. I don't know when that's going to happen, but if we continue to see prolonged periods where our economy is shrinking, then that means that job postings are going down, and so are a lot of these other white collar jobs and blue collar jobs in the United States, meaning there are very, very few jobs left for the average American. That is going to mean the wealth disparity in this country is only going to get larger. As a lot of these jobs disappear, people are not going to have work anymore. And if they do have work, it's going to be for your small corner store. And those jobs just simply do not pay you enough to get the education and skills that you need. It is not completely hopeless though in our economy. There is still going to be a need for some jobs in some fields in our economy, which means it's just going to fall on people to get this information themselves, because the schools are never going to teach it to you and the government is never going to ensure that it happens. Luckily, we have the internet, we have blogs, we have YouTube, so there is a lot of free learning that can be done in the United States. You can learn how the economy works, you can learn to gather more knowledge and to better your skills. And that is going to be more important than ever in the future as a lot of these jobs start to disappear. You have to try to stay on the cutting edge of everything, and more importantly, you have to try to find a skill and find experience and knowledge that is going to be universally valuable and in demand, because if you can find skills like that where what you have can't be found overseas and it can't be found in a robot, then no matter what happens with our economy and of course with inflation, businesses, as long as they exist, are going to find you valuable and you will be able to find a job in anything. Just about anybody can start doing that in the United States, but the amount of people that are actually going to be successful from it, well, that is definitely going to vary. But it's something that at this point is pretty much unavoidable, because businesses are going to try to figure out how to cut costs as much as possible, especially when we're in an economic downturn. That's why we can expect jobs to disappear, we can expect outsourcing to continue, and we can expect our entire workforce to once again shift over the next few years. And the big question is, are you going to be prepared for it? But now I want to hear from you on this issue. What do you think about these big workforce changes potentially happening in the next 5, 10, or 15 years? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.